One of the key focuses in Australasian markets yesterday was the release of the Reserve Bank of Australia's meeting minutes. These meeting minutes often provide further insight into the board's view of risks around the growth and inflation outlook. The RBA has previously noted that they do see the need for rate increases at some point. However, the market is currently not expecting this rate increase to come until later next year, particularly following the larger than expected contraction in Q1 GDP. This bearish mood has also been reinforced by the recent Eurozone debt woes, which has seen the markets further push out the timing of the RBA rate hike. The softer tone in the meeting minutes yesterday did not alter the market's view. However, our Australian-based economists do still expect to see a rate hike by August. They see that the contraction in GDP will be temporary as it is a result of the floods, and the fundamentals for Australian growth remain very strong. In particular, they expect to see very strong jobs growth over the coming months, and this will reinforce the positive fundamentals behind Australians' growth outlook. Looking to the financial markets overnight, once again there was very little action. The markets did manage to shrug off some weaker than expected US housing data. Adding to the positive sentiment, the market is now more hopeful of the Greek vote of confidence that occurs this morning. The positive increase in confidence in markets helped underpin commodities and the commodity currencies. This saw the New Zealand dollar remain strong against the US dollar, holding at the 81-cent level. Meanwhile, the New Zealand dollar also increased against the Australian dollar following the release of the RBA meeting minutes yesterday. However, the New Zealand dollar did ease against the euro as the euro received some support on increased confidence in the Eurozone debt concerns playing out more positively. New Zealand data released yesterday showed some encouraging signs on the visitor arrivals front. Visitor arrivals remained steady through May, following a strong lift in April. We had seen visitor arrivals fall sharply through March following the February earthquake. However, visitor arrivals have since recovered quite strongly. The earthquakes do add an additional challenge to what has been a very tough year. The high New Zealand dollar has limited the amount of spending activity we've seen from visitors and seen a drop in average spend per visitor.